Welcome back to the CryptoLabs YouTube channel. In today's video, we're going to be diving deep into GMX and talking you through how to open positions, how to short, how to hedge, how to use limit orders, stop market orders. Now, as you know, we talk a lot about protecting your capital, protecting your positions. As you build DeFi portfolios, you'll quickly learn that when markets move, it can really hurt you, especially if they move to the downside. So what we want to do is, as we open positions, I did a video here a while ago on how I would invest $100,000. And so I built this portfolio. I stuck to my rules. I stuck to blue chips, ETH stable, BTC stable. I'm earning fantastic yields on it, but I want to be protected in case the market moves to the downside. And yeah, we've got probably a dozen videos on this. If you do want the playlist for those, it's worth studying. Do let me know below. We'll also send you a doc that explains the whole process. So if you do want that, just do let me know. Just put Hedge below and we'll give you everything we got to help you out. But that said, I haven't really done a video on how to use GMX. And so in today's video, I will do that. Now, I am in the shop today because the house is a war zone. The little guy is a little bit crazy. We got a 14-month-old and he's being a little bit noisy, being a little bit loud today. So in my happy place, where I'm always building some cool projects, to me, I see it the same as you building a portfolio or building a car or building a bike or building a business. To me, it's all the same. It's playing with Lego, and DeFi to me is the exact same. So make sure you bookmark DeFi Buddy. Go to tools, go to Hedging Calculator. This is a free tool that we created. $1 of every UIG membership covers the development of DeFi Buddy. If you're a UIG member, thank you. If you've been thinking about joining the UIG, just know that you are also supporting the growth of DeFi Buddy. Now, we've done some videos on how to use this, so I won't cover that in today's, but if you would like another tutorial on how to actually calculate your deltas, how to actually figure out how much ETH or BTC or asset you need to short to remain hedged, do let me know and I will do a full video on how to use the DeFi Buddy hedging calculator. It's pretty self-explanatory, but if you'd like some support with it, do let me know. You can just let me know in the comments. So I'm going to skip that so this video doesn't get super long. But just to make this simple, once you input your data, and you go to continue hedge strategy, we're going to choose the break even at range because that's what I'm going to be talking about today. You can see how much ETH I would need to short in dollar value in order to break even if the market's tanked and I hit the lower end of my range. Then I would want to recoup. So you can see my naked LP, the orange, is $10,000. At the bottom of my range, it would be 96, meaning I lost $400. I need my short to make me $400 at the bottom of this range. Again, that's just a quick example, but you get the point. So over here on GMX, there's a few things you need to do. The first thing you need to do is you need to actually fund your accounts. So you're going to connect your wallet. You're going to go up here and you're going to go deposit and you're going to fund your account. That's step one, pretty self-explanatory. As you can see in this wallet, I've got $25,000 here. Now let's just get situated up here. You got a few tabs up here. You've got long, short, swap. Let's just focus on the long and the short right now. And then within those two tabs, you've got market, limit, and you've got a couple options on the more here. For now, let's just go market. All you're doing here, if I go, I want to buy $7,000 of ETH and I'm long, I am basically literally just buying spot at this point. And then you have this slider. And if I wanted to, I could spend $7,000 and get my hands on $650,000 of ETH. Now, of course, the second ETH moves down by probably a couple dollars here, I am liquidated and I lose my $7,000. So this is where you need to show some restraint. Now, I don't take leverage. Like all my long positions, all my bull run bags, all my treasury is just spot. I keep it in a hardware wallet. I keep it on my ledger. I keep it on the Tangem. I don't mess with that, but you've got the option to. Now, you're probably not interested in that if you're watching this video. You want to protect your capital, protect your positions. So you're ultimately looking at this short option. Now, I will take leverage when I'm opening a short, especially when it's calculated. And I'm not doing it to get rich. I'm doing it to protect my capital. Because if I need to short $7,000 worth of ETH, well, I could just be a little more capital efficient, use $3,500 and short the same amount. DeFi Buddy will actually give you those options. Again, I don't go much more than 2x. You are paying some fees for it, first of all. But at the end of the day, there's no massive downside, especially when you're following this strategically. So I'm going to open up this position just to show you what it's like. So I got $3,500 at 2x leverage. I am shorting $7,000 worth of ETH. I'm not going to set any take profits or stop losses. I'm just going straight up, short ETH, confirm. Then you're going to see this box pop up here. And voila, I am shorting ETH. So if we zoom in here a little bit, let me go nice and tight on the 1 minute. You're going to see this candle bob around. As this candle goes up, you'll see that this number goes down. And as this candle goes down, maybe it'll give us a brief moment, this number will go up. I will be in profit. That's the simplest version of this. I'm going to go a little more advanced because I don't do it this way, but that's the simplest version of it. You open an LP position, and then you head on over to a platform like GMX, and you open your short. Now, there's some downside to that because what if the market moves up? Then you're going to start seeing red here. So again, I don't do it this way, but I think it's worth showing you. Now, the next thing I can do, if you did use this strategy and you just open a short right off the bat, you can say, okay, and DeFi Buddy will actually help you with this, but you can say, okay, what is my recommended stop loss? How much capital am I willing to lose if I am wrong? Which we highly recommend you do. So if you follow this strategy and you open your short right off the bat and you're away from your computer, let's say prices just spike up. You don't want this short to just continue going in the red. So you may decide to close your entire position at a certain price point, and it will actually calculate your P&L. Now, I may be willing to take, a $200 hit. So if I wanted to, I could let this short run, and I could set, hey, if the price of ETH hits $3,415, get me out of this. I'll take my $200 hit. Of course, my LP will be worth more, but that's the price I'm going to pay for being wrong. Again, this is why I don't do it this way, but it's a valid strategy. If you're a little bearish, but you're entering an LP and you want to protect your LP right off the bat, you can open your short right off the bat. As you can see, as this candle drops, I am now $3, $4, $10 in profit, $12 in profit on my short, and my position is protected. As my LP is losing value, my short is making me money, and then if I exit my positions, I recoup any impermanent loss. So I could create the stop loss order, done, confirm, and you'll see here in the orders, I've got this stop loss set up, and it's going to trigger at 3,415. Now, something I do often is as I have a position open and it's in profit, I will actually trim this up. So I can easily go in here and just change my trigger price to whatever I wanted to. So in this example, if I wanted to, right, I'm already 0.6% in profit, which is wild, but if I wanted to, I could set my stop loss somewhere around here so that when my short closes, I'm actually automatically in profit. And there's so many different strategies, so many different ways you can do this. I'm just showing you how to use GMX. I recommend take $10 and play with this. Literally take $1 and go 100x leverage just so you can experience how quickly you get liquidated so you don't get greedy with 1,000 or tens of thousands. Now, another thing you can do, and this is typically what I do, is I open an insurance policy, but instead of just opening my short right off the bat, I'll open my LP and then I set an order in to open a short at a specific price point. So I can go into the short, I can go into stop market, I can open a $7,000 position, $7,000 insurance policy at a certain price point. So maybe that'll be $3,280. Again, you'd have to do the math on this, but what that means is as you open your LP, if the price of that asset goes up, you're all good. If the price of the asset starts going down, you'll trigger your insurance policy and you'll start recouping your losses. That's typically what I do. So let's just see. I want this to trigger. I'm going to set it to 3,285.87. I'm going to get aggressive with this. Maybe we'll get lucky. I'm going to open this order, done, confirm. And you will see I'm going to open a $7,000 position at 32.88. We might get lucky. We might hit that. This is the current market price. But if we don't hit that, my short does not open. Now you can see the benefit of that. Let's say you enter your ETH USDC position. ETH at the time is 32.90. If you open a short right off the bat, you may start taking some losses if there's a green candle. But we don't know what way the market is going to go. So I treat these like an insurance policy. I enter my LP and then I typically set it at around 2.5% below market price. And there's different ways to calculate that. Again, that would make for an 2-hour-long video because there's a lot of different strategy. But the point is, I'm not worried about which way the market goes. If the market goes up, my LP is in profit. I'm happy. If the market goes down by just a little bit, no big deal. If the market tanks, if there's a massive red candle, my short opens and I'm happy as can be. So what I'm going to do is I'm actually going to set this a lot tighter just so you can see what happens because it's nothing to be afraid of. I'm 1.28% in profit already, which is wild. Think about that. But I'm going to go set this trigger price to close this short much, much tighter. I'm going to set it at 3,295 and hopefully we hit one of these so you can see what happens. There we go. So I got 2 orders in, super, super tight. One of these will trigger. This one probably actually just triggered. There it is. So I hit 3,288. So it automatically triggered it. It added it to my already open short. And now instead of having $7,000, I have $14,000 all as well. And maybe we'll get lucky and we'll trigger this 3,295. It'll take profit on that $7,000 and I'll be left with a $7,000 short still open. Now I could just increase this to just exit everything, which I'm actually going to do here to make it simple. And hopefully this is just giving you a really quick glimpse on how much and what you can do here on a platform like GMX. So I just increased. This should update any second here. There it is. I will exit everything. So right now I'm in, I'm in $40 of profit. I will exit everything if the market price hits 3295, which I can't control the markets, but I'm hoping it does. Again, it's a really tight range. This candle's going to go up and down all day long here. If I need to, I will pause the video and just wait until it gets triggered. We're 30 cents away. There it is. Done. Executing order. Done. I'm completely out. And there you have it. So you can see how much you can customize this. You can enter a position, you can enter an LP, and maybe you're a little bearish right off the bat. You could open a short, you could open a hedge right off the bat. Now, maybe you're not bearish, but you follow your rules and you want to open an insurance policy, but you don't want to open the short right off the bat. No problem. You can put an order in for that short to open at whatever price point you want. You got to do the math on it. Or if you're in a short position and you're bearish, but you're like, if I'm wrong and the market goes up, I don't want to just keep riding my short up forever. Remember, the short is linear, the LP is non-linear, so it'll actually play against you very quickly, especially when the markets are green. It'll actually play for you if the markets are red, because your short will be more profitable than the IL in your LP, and you can actually use that to your advantage. That's a topic for a more advanced video. Let me know if this helped. Again, I could spend 3 hours, 5 hours, 10 hours teaching this stuff, but sometimes like theory is one thing. Just take $10, put it up on a platform like GMX and play with it. You'll get it really, really quickly, and it's an awesome skill set to have. You will become a much more profitable yield farmer. Again, you're thinking risk reward and how do I protect against being wrong? How do I invest thinking high reward? And then how do I limit the risk? If I can do that consistently and remove emotion out of the equation, you'll do really, really well. Really hope that helps. If this did, all I ask in return is like this video, subscribe to this channel, leave a comment. It does help the algorithm. We want this content to reach as many people as possible. And if you have any communities or any friends or any people you know or groups you know that could use education like this, share this video with them. That's all I ask. Help us out. Let's spread the word. Do let me know if you want the playlist and the doc around hedging. We do go into more detail. Just leave hedge below. I'll make sure it gets sent to you. And with that said, I'll see you in the next video. Happy investing. Peace.